Well, for more on what we can expect from Chinese firms this year, let's bring in David Williams, founder and CEO of Williams Capital Advisors. Thank you for joining us. So, Baidu, China's biggest search engine, has submitted draft registration to list its streaming service iQIYI in the US and follows some of these other big Chinese listings. So, why are we seeing so many high-profile IPOs by Chinese firms?
I think you're seeing it for two reasons. One, the equity markets as a whole are very hot. Notwithstanding the dip over the last couple of weeks, they're very hot. And when investors are looking for growth, there's the U.S. and then there's China, which is growing far faster. And so, U.S. investors really want solid China plays, and this is one of the best.
So, how are investors positioning themselves for a surge in these blockbuster Chinese IPOs?
There isn't a lot they can do. They lobby their brokers ahead of time to try to get large blocks of shares. But in a hot IPO, everybody gets scaled back. You may get 1/10 the amount of your order. But if an offer isn't hot, if it's overpriced, you'll get your entire order. And of course, that's a bit of a catch-22 because often when you get your full order, the actual IPO drops.
And let's talk results. How would you say that US-listed Chinese firms have performed so far over the last year or so?
In general, good, but that's excluding the fintech-related ones, and those are for the most part down. But that's the result of regulatory changes, and so I think that's a one-off that can't be necessarily applied to the entire market.
And which sectors are featuring most predominantly when it comes to the sorts of companies that are listing these Chinese IPOs?
It was fintech, education-related, and internet-related. And this year, I think it's going to be the name of the game is internet-related. Most of the U.S. players, the Googles of the world, the Amazons, et cetera, they're already public. And investors are looking for new opportunities to try to get those kind of companies a few years earlier in the cycle, or in their growth cycle, that is. And so there's a lot of interest in the Chinese internet players.
Now, it's interesting because in the more competitive sectors, we tend to see that Chinese IPOs that have backing from large, experienced Chinese firms tend to inspire a bit more confidence when it comes to long-term success. So what would you say are the best ways to boost the success and longevity with some of these IPOs?
Well, ultimately, initially, there's a lot of work that goes into trying to price the IPOs such that they're getting the maximum amount of cash for the company, but also not overpricing them such that they decline on the first day or in the first year. Assuming they do it right, and then there's equity research coverage of a given company, that's usually the long-term way to position the company right, not to offer too many shares in the initial public offering, but leave investors wanting more. That's usually the recipe for success.
And what do you see as the biggest challenges in the coming year for Chinese IPOs in the U.S.?
I don't think it's so much China-specific, but it's rather the risk, which is for all the equity markets worldwide, which is interest rates are rising. We saw that again today. Rates on the 10-year are approaching 3%, and if they keep rising, you're going to see a move away from risk assets, and that's going to hit both the Chinese IPOs and the U.S. IPOs. That said, on the China front, I think if we were to have another China regulatory action hitting another sector aside from fintech, that would cast a shadow over the entire country's offerings. But for now, it's been just that one sector that has concerned investors recently.
And we did see some volatility recently in the U.S. stock market over interest rate hikes and potential inflation concerns. So what's your outlook for the U.S. stock market and how that might affect Chinese firms' IPO choice and performance?
Well, so far it's been, the markets have rebounded pretty rapidly. But if rates start to increase even faster than is currently baked into the futures market, you're going to see, as I mentioned earlier, a big risk-off trade. And so that'll hurt both offerings here and Chinese offerings here. That said, while worldwide markets are correlated in the long term or in the medium term, sometimes in the short term, they don't always trade one for one. And so that could play into the hands of the Hong Kong exchanges as they try to lure more business away from the U.S. Already, they're slated to make changes this summer, which, if they go through, would allow dual-class listings, et cetera, which would allow them to better compete and not lose the next mega IPO like they did a few years ago with Alibaba.
And what about rising trade tensions that we're seeing when it comes to bilateral ties between the US and China? How do you see that affecting the appetite for Chinese listings and where they might choose to list?
Appetite for listings, I don't think it really has had much of an impact yet. You'd have to see much greater tensions to the point where it starts to crimp world trade or threatens to crimp world trade. Then you'd see appetite go down. In terms of where the companies list, they're just looking at a couple things: where they can get the best valuation and where they have the least restrictive regulatory environment. And if Hong Kong makes these changes that they're rumored to be making, they're going to be pretty competitive.
All right, thank you so much. David Williams there of Williams Capital Advisors.